Hello, fellow Rebel Capitalists. Hope you're well. We are back with the man, the myth, the legend, Chris Irons himself. Buddy, we got a lot to talk about today. I was just
How are
telling you
you?
these topics. Oh, you're going to love these topics. These are going to get you fired up. I can assure you.
I'm so
drink time for Chris.
I'm so much of a legend. I can't even figure out which browser window I've got open here. There you are. Okay, sorry.
You got it? Okay, so
and prior to that, the legend had forgot to hit his unmute button, resulting in backstage chaos before the show.
So Chris, I don't know if you heard about this, but today we had consumer confidence data come out from the Conference Board survey. And there's, they measure like three main components of consumer sentiment, consumer confidence or lack thereof. And it just hit like COVID levels, and it looks like it's going straight to like GFC levels. While at the same time, all your buddies on CNBC are telling us that the economy's fine, it's booming. Jerome Powell is coming out and saying that it's resilient, and all these words and adjectives that they use to describe the economy. Meanwhile, the consumer is sitting there tapping out like they just got into a grappling match with what was the guy's name that was undefeated?
Are you asking me?
Yeah,
Habib Nurmagomedov.
That's right. The consumer looks like they're in a jiu-jitsu match with Habib. And then I don't know if you heard about this. This is really gonna get you going. Trump has a new crypto, a new stable.
I saw that.
Did you see the team?
It's called no, I didn't see the team, but I saw the coin. It's called like $1 USD. I was like, oh, that's a very convenient name for a stable coin. $1 US. It's like we already have US dollars, don't we? The whole stable coin thing, I don't really understand. Like Bitcoin, I understand the case for it, but I never really understood the point of stable coins. It just seems like putting a middleman into transactions that don't need one. And especially when so many of the Bitcoin advocates claim that one of the best qualities of Bitcoin is the fact that not only that it's decentralized, but there's no counterparty risk. And so here we are introducing a counterparty all of a sudden, which doesn't make any sense to me.
There is some utility especially once you get outside the United States with like Tether. I'm not a huge fan of Tether, but there is utility there that you can transact very, very quickly outside of the system. But more on that in a moment. And then lastly, we got some shocking housing data, which I didn't know about. I got to give a hat tip to Graham Stephan, the YouTuber. I didn't realize really how much regulation increased the price of single family residential homes and multifamily. So we've got a breakdown of that is, I think, really going to illustrate my point when I talk about Doge. And I'm like, look, this is great that we're reducing government spending, but I think the priority should really be on reducing regulations. And I think,
it's regulation that's driving up the prices?
Yeah, I've got specific data for how much regulation drives up the price of each new house.
Got it.
So let's start by going over to this consumer confidence. And this is from the Conference Board. And I believe they come out with this monthly, Chris. And right here, you can see the headline. And this is not George Gammon writing this. This is straight from their website. U.S. consumer confidence tumbled again in March. This is their latest press release, came out today. Consumer expectations for the future at a 12-year low. So the Conference Board here, the index fell by 7.2 points to 92.9. This is based on consumers' assessment of current business and labor market conditions. That component of it decreased 3.6. The expectations index, which basically is consumer short-term outlook for income, business, labor market conditions, dropped by 9.6% to 65.2, the lowest level in 12 years, and well below the threshold of 80 that usually signals a recession ahead.
Interesting that the part of that index that got clobbered is the one that includes income. The other one does not include income. So if you go up, the expectations index includes income. The present situation index doesn't. I guess that's more of like a snapshot, a balance sheet style shot. But yeah, that's not really surprising.
Yeah, and it's frustrating because I just look at the comments on the YouTube videos and I talk to people at Rebel Capitalist Live and interacting with just average Joes and Janes, and they tell me that, hey, we're struggling, my friends are struggling, my coworkers are struggling. We're managing, but it's tough. And it's
Yeah.
tougher now than it was in 2019. And you get all of this anecdotal evidence while you see these people that kind of just live in this bubble in either LA or New York or kind of these financial hubs where most of the people own assets, and they're sitting there, driving around their Lamborghinis and or just down in Miami, popping bottles of champagne, and like, what are you talking about? You're just complaining. You just are sour grapes. Really, the economy is booming, and you're just too stupid to realize it. They take a very condescending tone, and I think it really frustrates the majority of Americans, as well as it really frustrates me because I'm talking to these people and I see it firsthand.
Well, that's part and parcel with the entire, I wrote an article last week on my blog just about, look, there's hypocrisy in both political parties as it relates to economics and fiscal policy and monetary policy, as we both know, as your listeners know. But really, on the Democratic side of the aisle, the party that is supposed to be all about not just equality, but also, equity now, right? Which is they want everybody to have the same outcome, not just the same opportunity.
Right.
It's a very similar situation because the monetary policy that they stand behind does nothing but widen the inequality gap. And that widening of that gap in the chart that we talk about all the time has done nothing but accelerate. And so as that accelerates, the top 10% of wealth owners in the country become disproportionately disconnected from the bottom 50% or the bottom 90% rather. And they bear the costs of a lower quality of life, while the top 10% of wealth holders, like you're saying, they have no problem at all. They just don't see it. Hey, things are fine, And so, that's, again, it ties into inflation. One of these things that is not so understood by everybody that it's easy to wrap your head around. But when you're struggling and you bear the brunt of inflation little by little by lower quality, lower and lower quality of life, shrinkflation, things not just getting more expensive, but getting less for more money. That's where you really feel it. Those are the people that really feel it. The people that can barely buy a box of cereal a week notice when that, box that was $5 for 16 ounces not only costs $7, but now it's 14 ounces. That's a big, huge, profound change in their lives. Now, otherwise, the people you're talking about, the people who claim to be, pushing for the end to inequality are out there advocating for policy that does nothing but the opposite of the direct opposite of what they're advocating for. That's the same thing.
And the reason that's so tough for the average Joe and Jane is because the necessities are a bigger percentage of their overall paycheck. So if the necessities, let's say, are 50% of their paycheck, the necessities might be 1% of Joe Biden's paycheck, or Kamala Harris, or something, or Bernie Sanders for that matter. So, or these, Wall Street types that are walking around talking on CNBC, sitting there saying how the consumer just has sour grapes and they just don't know how good they have it. And they're just, reading too much of Zero Hedge. Another thing too, that I want to point out in regards to inflation is this disproportionately benefits not just people who have assets, but people who have assets with leverage.
Yeah.
Because
100%.
If you can go out there and you got, you can, one of these big corporations as an example, where you can borrow it, who knows, 2-3%. MicroStrategy, good example of that. And the assets go up, you're out of pocket. Let's say you have an asset that is worth $100,000, but you only have $10,000 out of pocket to control that asset. So as opposed to someone that paid 100% cash, that would have 100,000 out of pocket. If inflation goes up by 10%, now that asset is valued at 110,000. So that, in nominal terms, the guy that paid cash, well, he's just at a break even as far as his purchasing power. But the guy that only put out 10,000 because he's able to get that cheap leverage, well, now all of a sudden he just doubled his money. So his purchasing power increased dramatically just because of the nominal amount of the asset that he owns went up. And I think that's something that most people really don't consider. It's you have a disproportionate access to super cheap, easy credit in the form of all these corporations and the people that are in Washington, D.C., and the people that are in New York and maybe in Los Angeles. And the average Joe, that they might be able to get a mortgage, that's where it ends. Or Josh, they can get a credit card debt, at 30%.
If Josh can pull up this chart, Josh, it's on my Substack, and the article's called "The Dark Secret Behind Democrats' Economic Policy." It's the first thing you'll see if you pull up my Substack, and it's a free article. But if you scroll down, you'll see a chart that just says net personal wealth, and that's the one that I'm talking about. It's right there. Hello, there I am. There I am again. Welcome to the future. This is like me in the movie Interstellar. I can see fucking 9,000 versions of myself. This is when I post.
I was thinking that Leo DiCaprio movie. What was that? Inception?
Oh, maybe, yeah. Interstellar, when he goes back through the space-time continuum and,
Yeah. All right, Josh, you got it pulled up? Or Josh, just let me know when you get pulled up. In the interim,
I do have it pulled up. I don't know if you guys could see it.
No.
Let's see. I'm trying to add it to the stage.
Damn it, Josh. Get it together, will you?
For some reason, it just it won't.
Yeah, he had all those jokes in the room, George, before we went live with the stream. We're trying to get a chart pulled up here.
And he's doing so well blocking all the blue light, Chris. You would think that he would, with the lack of blue light, he would be more on top of it here.
Trying to give me dating advice before the show. Can't even get a simple chart. You asked me to bring up, who's that in the background? Is there a family member? I told you I don't want anybody in the background when we're live streaming. God damn it!
I think the problem, Chris, is because you need to give your email to look at the website.
Well, just fucking put asshole at dildo.com in there.
Email, but it's telling me that it won't let me share this screen.
Okay, Josh, work on that.
No,
Can
I just send? I'm going to email the chart to George Gammon right now. See, this is what I mean, guys. Try to run.
Right. So, Chris, while you're working.
All right, look at your email, George. It's in your email.
Okay.
That's all right. Everybody can wait. It's important. There's the article. Okay. All right, scroll down. All right, down. Till you see net personal wealth. There it is. Okay. Right there. All right, so that's what I'm talking about, okay? Yeah. That is the net personal wealth of people in the United States. And what you're looking at, and this is a key point. As Trump would say, this is the whole ball game. That's the whole ball game right there. This is the whole fucking ball game right here, okay? Anytime anybody ever tells you how great, modern monetary theory is, or Ben Bernanke said once on TV, we can print money at no cost. It's like, no, he means no cost. Like, it doesn't cost anything to run the fucking electricity, on the printer. Of course. And here's the actual cost. Okay. And what you're looking at there is you're looking at an insanely, a widening gap between the haves, which is your purple and your fucking green line there, and the have-nots.
That's which New York City and LA. New York City and LA.
Everybody else on the bottom, okay? So, if you ask somebody with the green line or the purple line, like, hey, you having trouble making ends meet this week, and they're driving around in 10 Bugattis, like, of course they're not having any trouble making, for them, the burden is probably I've run out of dumb shit to spend my money on. I got so much money generating so much in interest, and I can't find more dumb shit. That's why you go to like fucking Abu Dhabi and you see these people with oil money with like pet tigers and all this shit. What the fuck you need that for? Just like they're just out of ideas. Like I've got this giant hole in my soul that I can't fill, from some shit that happened to me when I was a child. I'm the chairman of the board of like Saudi Aramco or something. I make $1 trillion a minute and there's nothing I can buy that's going to make me happy. And that's like, people are still trapped in that same psychological prison. So anyways, look, The point is the dickheads that are telling you that their whole job is to make things more equitable for people are the same people advocating for this monetary policy. And what you'll notice about the gap is that it's accelerating, meaning that that the gap between the top 1% and the bottom 50% or 50 to 90th percentile, or the bottom half all the way down there, like the way that this chart is scaled, it doesn't even look like the bottom half of everyone in the US has ever even ticked up. Of course it has. You'd have to zoom in on the bottom part of that chart. But that is the result of monetary policy. And with money comes power and influence. So they're not just absconding with the money and with the purchasing power, they're absconding with the overall power, the political influence, the corporate power, all the things that Democrats rail against. I was reading today, just on a side note, wasn't going to bring it up, but fuck it. I was reading today that Jasmine Crockett was worth like $29,000 when she started in Congress in 2022. Now, I don't know if this is true or not, but I was just reading this before on Twitter. Because she made that stupid comment about Governor Abbott today. She called him Governor Hot Wheels, which now she's trying to walk back, by the way, and saying, I didn't mean it because I was referring to the planes, trains, and automobiles that they're using to ship immigrants out with. To which I said, that makes Jamal Bowman's explanation of pulling the fire alarm because he thought it was a door handle sound like fucking astrophysics.
Right.
But she supposedly had a net worth of $29,000 in 2022 and now is worth $9 million. Does anybody want to? Now, if that's true, which I don't know if it is, but if that's true, on a $174,000 a year salary, that shit doesn't add up. Okay. So that chart fucking benefits people that have money. It means that their policy disproportionately helps the super rich. Democrat, Republican, I don't give a fuck what you want to call yourself. If you support the way that monetary policy and to some degree fiscal policy is run in this country, that's what you're contributing to. So as a bipartisan issue, if you are not raising alarms about money printing and monetary policy, I don't care what party you're from, you're part of the problem. And the Democrats, if the Democratic base understood this, they would be at a lower approval rating than they are right now at, 29% or whatever they're at.
They do understand it, but they just think that's because of capitalism, Chris. That's what
happens.
Well,
that's what they say. Half of them, I'm sure, aren't smart enough to understand what's going on. And the other half, I think, would probably be using that as cover, because capitalism is, I got a friend that, a friend of a friend who wears a shirt that says something just like, destroy capitalism. You walk by the anarchist bookstore on South Street and it's like they got signs outside, so, capitalism is the problem. Kill capitalism. It's just like you don't talk about painting with a broad brush, right? Kill capitalism. Like, yeah, okay, let's go live in the fucking Soviet Union. You can't help these people. Look at the chart. Any questions? Consult the chart. That's the last thing I'm going to say today.
Yeah, and I don't think it's really monetary policy, to be honest with you. I think it's really...
No, who's printing the dollars? The Treasury?
Well, if you want to go into that, how does the Fed print the dollars that circulate in the real economy?
I don't want to go into it because you're much smarter than I am. Let's move on.
So we won't go there. But in my view, the Fed's balance sheet really doesn't matter. Everyone knows that. So it's more so the fiscal spending, and it's the regulation that incentivizes asset purchases, and we're going to get into that with housing. And then where you do lay the blame on the Federal Reserve, or at least I lay the blame, is with bailouts. Because if they actually allowed free market capitalism, they would allow people to fail. They would allow corporations to fail. They would allow big banks to fail. And if they did that, people would take a much more risk-off type of approach. And I can assure you, we would not see the S&P 500 or the NASDAQ or the housing market where it is today. So I put more so the blame on fiscal regulations and the bailouts that obviously the Federal Reserve was a part of, as opposed to just, QE or dropping or increasing rates. Okay, so let's get back to this, Chris, and let's see. So The details here I think are important. March's fall in confidence was driven by consumers over 55 years old. I haven't seen that before. So this is, I think, this is new as far as I can tell. To a lesser extent, those between 35 and 55. By contrast, confidence rose slightly among those under 35. You know what I'll bet this is a result of, Chris, is the people 55 and older have most of the stocks. And so they've seen their 401k just get shellacked.
Yeah, that's a good point. I was thinking maybe Social Security.
Yeah, no, I would say
people worrying about cuts to Social Security. But
yeah, that could be true. Yeah, that could be it. Maybe it's a combination of both those things. It says, by contrast, confidence rose with those under 35 as an uptick in their assessment of the present situation more than offset gloomier expectations, I think, about the future. The decline was also broad-based across income groups, with the only exception being households earning more than $125,000 a year. Shocker. Shocker, shocker, shocker.
All right, let's see the chart.
So, well, let's go down to this one. This one, I think, tells more of a story. So the expectations index, which is the one that has gone to levels that we haven't seen, I think, in 12 years, but, you know, with the exception of 2011 or so, I mean, you almost have to go back to the GFC. I mean, compare that to the cerveza sickness. I mean, look at this. The cerveza sickness, I mean, how bad should have expectations been back then, for heaven's sakes? And we barely got down to the 80 mark that they were referencing. And the reason that's important is because usually that's a very strong signal that the economy is in contraction or close to.
Well, we're under that. We're the lowest we've been, dating all the way back to 2013, as you said from the get-go. But I'm looking at the chart too. Yeah, that's very interesting to see that. I guess my guess would be the market tanked, and in the time between the market tanked and the expectations reading came in, the Fed implemented quantitative easing. That would be my guess. That why the blue line isn't fucked like the black line.
Yeah, I think my takeaway here is looking at that black line. I think the blue line to me would tell me kind of what's going on with the fundamentals in the economy.
Right.
Not that we're in recession, but they're deteriorating or they're not good. But the black line would give me more an idea of timing. Right. Because you notice when that black line really starts to tank, that's when we see
it's a wrap.
That's when we see the gray shaded areas.
Yeah.
So we're gonna
and it looks like, doesn't look especially promising. I mean, if you were a technical analyst and you were looking at the trend, which is basically, just using your eyes, doesn't look especially promising.
Yeah, basically lower lows and lower highs.
Yeah,
is what we're talking about there. All right. Well, let's see if we get some data points. 17.1% of consumers expected business
expectations 6 months hence. 6 months hence. What is it, the 1800s?
Yeah, the Fed always uses that term too whenever I read their blog posts. But okay, so 17.1% of consumers expected business conditions to improve, down 20% from February. 27.3% expected business conditions to worsen, up 25.5%. I mean, so it's not that it's just deteriorating, but that it's deteriorating rapidly, like really rapidly. 16.7 expected more jobs to be available, down from 18.8. So that's roughly the same. Do we see any good news here?
Family finances and recession risk. I'm very interested in that. Can we go down? Assessments of their family's finances. What did it say? It went up, right? It increased slightly.
But let's see the differential here. So family's current financial good ticked up slightly. Yeah. So I think what that goes back to, Chris, is this black line.
Okay.
So the black line still is not really in the danger zone. I mean, it's trending the wrong way, but it wouldn't really signal that we're, maybe in the heart or at the cusp of a recession. But again, this is just one indicator. I mean, you've got to look at the data in totality to come to a conclusion or to do a proper analysis.
Family's expected financial situation 6 months hence. Okay.
Yeah, this is the hints that
the better line is down, right, and the worst line is up.
Yep.
Got it. Perceived likelihood of a U.S. recession over the next 12 months. Okay.
I think this is basically Trump. Because look at November. I mean, it's just getting worse and worse and worse. And all of a sudden, November hits. And I think even some Democrats.
So it'll be interesting to see where it goes now.
Yep.
Because it's. I forget what I was reading, but after the market came down a couple weeks ago, I was reading like Fed commentary from somebody. And I forget what the statement was, but it was such a bold-faced tell that they were basing their commentary on the market, because I remember just reading it and just thinking like it has to be the only thing these guys are looking at. It was something like they had made, it was Bostic or it was Powell had made a comment like a week ago that something was under control and the market came down 5%. And then it was like, well, actually the economy may not be doing well. And it's like, all right, they are completely incapable of differentiating the economy from the stock market, because there's been no new data that's come in the interim. We didn't get any new macroeconomic data that would make them feel that way. And so it's just, it really is going to be the tail that wags the economy dog, because as the market moves lower, everybody's collateral gets worth less and less. And then you see people are already tightening the belts due to interest rates, and they already have less to spend on, getting less at the store. But once the price of these financial assets comes down, that's really going to that'll set something in motion for sure.
Yeah. And I do agree with the Fed about when they talk about the psychological components of asset prices going up or down for the people who own the assets. I forgot what the technical term for that is, but I think it is true that when people's portfolio goes way up, or they look at Zillow and their housing, the value of their house has gone up by
they believe they're wealthier.
Yeah, and so they have a higher propensity to spend. And then one man spending, another man income, and then you get higher aggregate demand. So I know there's a technical term for that, but I forgot. But anyway, you get what I'm saying. So I think there is.
Yeah, I think the term is like euphoric financial coke bender, basically, because then you wind up like my landlord, right in 2007 in Philadelphia, who winds up accruing like 10 or 15 properties, and then, taking all the equity out of them and to renovate them all, like he was going to flip them or whatever his plans were. And then the crisis hit. And I remember, I did a lot of dumb shit back then. Trust me, I won't get into it, but, I was an idiot in my 20s. But I do remember it was 2007 and reading some stuff in the paper like, hey, something, mortgages, something, subprime, whatever. And I remember on my lease, when that dude gave me my lease, he had a clause on there that was like, in the event of a mortgage default, something to the effect of, the tenants just got to bend over and move out or something. And I made him cross that out, initial it, and, otherwise revise it so that it was preferential to me instead of him. And sure enough, I wasn't there 8 months. And he was losing the place, and he was out of money. He was coming to my door and asking for the rent in cash, and like it was a bad scene. What's the point of that stupid story? The point is that's what happens when on paper the difference in your asset prices goes from high up to low down. All of a sudden that accordion of leverage, like you're talking about, starts to compact, and then you've got less wiggle room. And there is a psychological component to that as well. It's just the same, it's the opposite of animal spirits. It's the oh shit moment.
Yeah, or in the chat, they're saying the wealth effect. That's what it was.
Yeah, exactly right. Exactly right. Elzam won with the assist.
Yeah, I think.
Also, by the way, since we're talking about the chat, which I didn't want to bring
Andrew too. Andrew mentioned the wealth effect.
I didn't want to bring up the chat because I want to be professional here when I'm on you. But somebody said they were from Mount Airy before, and I just wanted to say what's up. I didn't think it was relevant to the fucking, consumer, whatever the fuck index we were looking at
It's
is.
not
But
relevant.
now that we're off topic, I want to say,
No,
what's up, Mount
I
Airy?
can confirm.
I
It's
lived in Germantown. I love fucking Mount Airy, and you're my boy. That's it.
All right. So now let's get over to, I just shake my head on this, Chris. I don't even know where to go with this, man. It's just, it's almost like this can't be real. Like we've got to be living in some bizarro parallel universe.
All right. Well, let's see it.
Here we go. World Liberty Financial. Shape of a new era of finance.
Yeah.
Be defiant. Defiant.
Get it?
I get it. Yeah. We're leading a financial revolution by dismantling the stranglehold of traditional financial institutions and putting the power back in where it belongs, in your hands.
Well, that sounds good if you can deliver that.
Yeah, I just don't know what. So we already have a stable coin from Coinbase. We have Tether. I don't know why. What is their value proposition here, assuming there is one? And here's where I just have to shake my head even more here. So you go into the token, which it sounds like they're selling. And let's be clear, guys. What this is it's just, it's like a bank that doesn't have, or that has time deposits, but no one really accesses the money that they have in the bank. And all they do is just pocket a fee for AUM. Right. So it's just like a big bank. They're going to make a percentage on the assets under management they have, or the deposits, let's say the liabilities. And with Tether, they're making literally billions and billions a year just by taking your dollars, buying treasuries, and then just giving you effectively a piece of code that you, for whatever reason, find value in. And they just don't do anything. They just sit back and collect that fee on all of the transactions, or just under assets.
This is like the CoreWeave IPO. I'm just like, can somebody just tell me what they do? It's like this. Like, what is this? What am I looking at?
Right here, shape of a new era of finance. But again, to your point, Chris, it's like, okay, so how does this? Why is this a new era of finance? Like, how is this different from everything else? And then how is this different from even the system that we have? It's not like this somehow alleviates the need for, know your customer, KYC, any of these other things, I would assume. But let's get down here to meet our team.
Okay, you got Trump, Chase Hero, never heard of him. Zach Folkman, never heard of him. Keep going. Stephen Witkoff, never heard of him. Zach Witkoff, never heard of him. Alex Witkoff, no relation. I'm sure there is. Never heard of him. Rich Teo, never heard of him. Corey Kaplan, never heard of him. Octavian Lanita, never heard of him. Bogdan Paranavel, never heard of him. And Alex Golubitsky, never heard of him.
So the first thing, and look, I'm all for being casual, and I know you are too. But if you were on the board, or if you were part of this team,
he's the hip young co-founder. Are you going to take exception with Chase Hero? Because maybe you just don't recognize that brilliance sometimes wears a fucking Old Navy sweatshirt, George. Okay? You don't always have to wear a suit.
I get it. But the hat backwards, I mean...
Bro, he's hip. He's edgy. He drinks fucking Mountain Dew at the desk.
But I don't want someone that's participating in the X Games, managing my billions of dollars.
You don't fucking understand, George. You could never in a million years understand this guy's brilliance, okay? He's pulling all-nighters. He's fucking landing rockets backwards. He's just... he's hopped up on Red Bull and what was the shit SBF was using? Nicotine patches and amphetamines. This guy has so much brilliance in his head that you just, the bottleneck is everywhere. He needs to get his heart going at 170 beats per minute at any given minute just to make sure that the shit can come out, like without interruption.
Yeah,
And
he's
so,
coming to
like,
work every day.
if that's the price we have to pay for that brilliance, then he gets to wear the hat backwards. Not to mention, it looks like the hair could be bleached underneath there. He may have a side gig, DJing somewhere, which is fine because he needs an outlet for his creative juices too. So don't judge him until you.
I would just prefer the guy that's managing my billions of dollars, or managing billions of dollars, where there is quite a bit of counterparty risk there. And you have to have confidence that they're actually buying the treasuries with your money. And you have to have the confidence that they're not issuing more tokens than they have dollars as assets under management.
We gave Zelensky like $300 billion and he came to Congress with his hat on backwards.
Yeah, and I just don't like that. I would just call, maybe I'm crazy, I don't know, but I would just prefer that the guy that's managing my billions of dollars doesn't ride into work on like a wingsuit or something.
You
like
don't
that.
know anything about young, hip, edgy founders. Have you seen Jack Dorsey lately? He's got a nose ring. He's meditating in Africa. He's got a beard.
One thing I do know is they probably haven't lived through a recession. And
I don't know what this guy has lived through.
Yeah, maybe maybe I shouldn't judge the life experience there, but just look, if I was setting up a stable coin, Chris, my team, meet the team here, no one would be wearing a hat backwards. I can assure you. Now, what is Barron Trump doing?
He's 19, what is he? He's the Web3 ambassador.
What is a Web3 ambassador, Chris? Do you have any idea?
I don't know.
Or Donald himself is the chief crypto advocate.
Well, that's easy.
I think that's another way of saying the chief crypto pumper and dumper.
The word is advocate, George.
Excuse me. Yeah.
Get it right, or next time you walk in the office, Chase Hero's not going to hit you with the double guns. What's up, George? Yo, brother. What's going on? We getting apps later? Getting apps and happy hour? All right, brother.
What are the I just look at Chase. I hate to harp on this, but what are the chances that he's one of those guys that gives you like the knuckles and then like the explosion? Like, what do you think the probability of that is?
Chase?
Yeah, that he can't shake your hand.
I think he's a double gun guy. I'm going with the double guns. What's up, bro? Just over here crushing it. Revolutionizing the future of finance. How many can I put you down for?
Yeah. Oh, geez, Chris.
What's Old Navy guy's name? I like this comment. What's Old Navy guy's name so I can make sure to avoid him in the future? Please, someone. My name is Chris Irons, Mr. Ding Dong Daddy. Which, by the way, if that's a Cherry Poppin' Daddy's reference, then you have my respect, even though you don't like me.
And another thing, these pictures are so photoshopped. I mean, this just reeks of a scam. I'm not saying that it is, but
yeah, it doesn't look like they were all in the same room with the same photographer.
Now, look at this guy's hair is kind of weirdly colored, greenish gray. I mean, this guy looks straight out of a Bond movie.
He looks like he's in GoldenEye 64. He looks like he's actually in. His photo looks like he's in the N64 GoldenEye game. Like he's one of those like non-player characters standing in a laboratory somewhere.
Exactly.
Bust in like shooting somebody with the hat, the polygon cutting off the head. Or maybe he's got Turkish hair implants. I don't know.
Just, again, I just shake my head. I'm just like, are you new to crypto? My guess is absolutely, unequivocally, I am. Geez. Security contributions. Well, they're backed by Fuzzland, Chris, so that makes me feel a lot better.
That alleviates most of my concern. Put Zokio on that list and I'll give you 100% of my money, but I didn't see him down there.
So this is governance, World Liberty Financial Governance. This is the cornerstone of our decentralized platform. How is their platform decentralized, just out of curiosity? If they're the ones that are taking all of your dollars and supposedly buying the short-term treasuries and then giving you the World Liberty Financial Token, how is that that's the most centralized thing on the planet. It's just like Tether. This is just complete nonsense.
I don't know. It looks pretty legit to me. Nice
As
anti-alias font,
as a
gold letters.
WLFI owner, Chris, you have an exciting power. Whoa. Owners to shape the future through active proposal submission, review, and voting. Oh, this is probably how they're
Called do our
giving
work
a
for us.
decentralized gimmick here. The governance process, proposal of submission. I'm sure they're really going to pay a lot of attention. I'm sure Trump is going to read every single one of these.
Oh God, no! This has
Community
got to
review.
be.
I mean, this is
It's got to be like Eric and Baron and Don running this, because I saw Eric's comment like after Ethereum crashed a couple weeks ago, like just my opinion, but it's a great time to buy Ethereum. I'm just like, who are you? Like, what do you do?
Yeah. So on this note, I was talking about MicroStrategy yesterday and how they came out with this preferred offering at 10%. I was reading today's trading at 12 or whatever it is, but it gets me kind of just wondering. And I wanted to get your view on this because you analyze these companies all the time. That's kind of your real job. And so you're very accustomed to looking at financial statements. And my thing was not, is this a bad idea, good idea? Yeah, I'll leave that up to I know this is a very contentious topic, so I'll leave that up to the viewer to decide, make their opinion. But I'm just trying to figure out, do they have the cash flow to cover the dividend payment? That's all I want to know. That's all I want to know. And
well,
if they don't, I'm not
I
saying
think the prevailing wisdom with strategy is, as long as their equity is trading at a premium, that they're going to be able to do that, right? I mean, that's basically what they've been doing. Go ahead.
But what you're talking about there is, if it's trading at a premium to NAV, then they're always going to be able to access and sell more shares or whatever it is. But I get that's one component, and you have to consider that when you look at their ability to make the dividend payment. But what I'm talking about more specifically is their ability to pay it like a normal human being or a normal business, where they just actually make the payments on what they owe due to cash flow, due to profit, due to what the underlying business is actually making on selling goods and services, right? As opposed to someone that's like, okay, I've got a $2,000 a month mortgage, and sure, my income is zero, but don't worry about it because I've got a credit card with $100,000 limit. It's like, okay.
Well, if they have collateral that continues to appreciate, that's going to afford them the ability to do whatever they want.
Okay, but again, that's looking at that bucket over here. I just want to specifically look at cash flow. So let's go over here. And first of all,
but you can't specifically look at cash flow, because you're looking at the underlying business and the cash flow of the underlying business. But really, they're able to generate cash and raise cash, leveraging their Bitcoin hoard. And so if they have to pay it, go ahead.
But I get it. But that's pending on more people giving them money. That's pending on the price of Bitcoin going up. What I'm trying to do,
that's correct,
is that let's assume that doesn't happen for a moment. Can you make the payments just based on what your underlying business is doing? Because to me, that's how I would sleep at night if I was the business owner, right? Me too. Making the payments isn't contingent upon all these other things happening that I have absolutely no control over. I'd much prefer my ability to meet my liabilities
out of your income stream, right?
Yeah, that I actually have control over, right? I.e. my business.
Of course.
Here,
so what's the total amount they're paying out a year in dividends?
Well, I don't know, because I don't know the cumulative or how many of these preferred shares they've actually issued. But first and foremost, let's just try to come to the conclusion as to whether or not they're making a profit, because regardless of what that is, if you're not making a profit, there's really that kind of settles it right there.
The words loss from operations right there is, you can just stop right there.
200 million, right? But what the kind of bulls will push back, and they've got a great point here, is this includes a digital asset impairment loss of 180 million. Now, I actually looked up what this was.
Right.
And basically, the short and sweet version is they have to take their Bitcoin, and if their Bitcoin at any point during the quarter gets below a certain threshold, they have to take that as a paper loss that
Right.
adds to the loss from operations, even if the Bitcoin or whatever the asset is goes back above that threshold.
Yeah,
that
and what's
line.
crazy is I thought they changed that accounting rule in January of 2024 so that they wouldn't have to do that, or maybe it's effective this year because I knew that that was the rule. The rule was on an accounting basis, it's called something like un, intangible,
It's an
like
impairment
deferred.
loss. That's actually the
Yeah,
technical term.
but right. But there's a name for the accounting treatment. I was just listening to somebody talk about it a couple of days ago, and the idea is they can't mark the Bitcoin up if it goes up, but they have to incur the loss against their P&L if it comes down, which is what that is. But for some reason, I thought they changed that rule in early 2024.
I think it takes effect, if I'm not mistaken, in 2025. And I
Okay, so
totally agree
that's
with Saylor and with the Bulls that this is just totally ridiculous that they
yeah,
have to do this. But here's my point. The digital asset impairment loss, if you notice, is 180 million.
right.
So that is lower than the total loss from operations, which is 200 million.
Right, so they lost 20 million.
Yeah, so that's what I wanted to get your opinion, because to me, the layman, I'm like, wait a minute here. They still lost 20 million.
Yeah, so if you X out the 180, they lost $20 million in a quarter. Yeah.
Yeah, and so then if you go to their new spiffy little website here, which looks oddly like Trump's.
Looks nicer than Trump's.
Yeah, it does. We got to give him credit there. Actually, here it is. I'm sorry.
Greg Winarski reminds me of Clerks. The name's Winarski, and I wanted a movie tonight.
So
Watch this 241. Sorry.
No problem. If we go down, geez, where was that? Here it is. Oh, it's catching up with the internet here. So if we look at the apples to apples comparison here for the other quarters, because that, to be clear, was Q2 of 2024. So if we go back, we've got Q4 2024 going all the way back Q4 2022. We can see the loss from operations right here, which again includes the nonsense impairment loss. But the impairment loss is, let's see, right here at the bottom. So the digital asset impairment loss. So each one of these quarters, as far as I can tell, the actual operation loss is higher.
100%. Yeah. So you're just trying to X it out. It looks like they posted an operating loss every quarter. Yeah.
Yeah. So if now, again, these financial statements better than I do. Is there a way that they could somehow be cash flow positive with the underlying business if they're running
just from operating cash flow? It doesn't look like it, but I'd have to reconcile the income statement to the cash flow statement, and I'm not in a position to do that. I'm not good enough to do that in a way but at first glance, when you're looking at operating expenses, that's the key, right? Because everything else is just you're raising money or it's cash that you've got from investments. Things that exist outside of the operating entity. So, your operating income or loss is really the key focus on how a business is doing. And here it looks like the operations of the business are operating at a loss.
So if this was your business, or if you were consulting a business that was in this situation, wouldn't you tell them just to close shop? What are we doing here? You're flushing.
You mean the legacy business, right?
Yeah.
Well, they may very well be in the process of doing that. I mean, first off, that's not just something you just shuttered the doors on, but I mean the fact that they've renamed the company Strategy, they've said that they're going to become a Bitcoin development company. So in essence, they're kind of all in on being a Bitcoin company already. Just so happens there's this legacy, intelligent software business, which maybe they'll offload, maybe they'll sell it at some point and then take the proceeds and buy Bitcoin. But so you make a very good point. You make a very good point. To make the counterpoint, to be a devil's advocate, they've gone from having a market cap of whatever $100 million to being a whatever market cap they're at now, which is well into the billions. So let's see, they are a $89 billion company, and so you can play ticky tacky, yes or no. Is the legacy business losing $20 million a quarter? Well, like, it really doesn't matter when you have a $90 billion market cap, and like 5 years ago you had significantly less. 5 years ago, their market cap was like, I don't know, it had to be less than $1 billion, had to be like 500 million or something.
Right,
So,
but I want to be clear. Your market cap has nothing to do with your ability to produce goods and services. It has
that's
nothing to do with
100%. You're 100% right. However,
only
it
has
does
to do with how much hysteria that you can create around.
That's not true. That's not true. Your market cap is determinant of how much what valuation your company can sell equity at, for example. So if you sell equity at a $90 billion valuation, does a $50 million legacy business really mean anything?
Okay, but how long does the market play that game when effectively, and correct me if I'm wrong, what's happening is I'm Michael Saylor, I'm taking 100 cents from someone,
right?
And I'm taking 15 cents to dump into my business and just flush it down the toilet. I'm taking another 5 cents and using it to pay a dividend or whatever. And then I'm taking only 80 cents of what you gave me and actually buying Bitcoin. So
but
at some point, doesn't the investor say, wait a minute, I'd actually rather take the whole dollar and buy Bitcoin as opposed to just have a claim on 80 cents of Bitcoin and let Saylor flush the rest down the toilet and pay
100%. 100%, but the market needs to come in first, and Bitcoin needs to get whacked, and that would kind of make people rethink. But right now, he's still riding that. He's riding the asset appreciation higher, and it doesn't look like there's any signs of stopping. Sadly, I get that I get your point completely. It's not that I'm missing your point that there's no real business here. It's just everything is determinant on the price of Bitcoin, essentially. And the more products that he introduces, the more classes of preferred shares, the more dividends he wants to pay out, the more he wants to sell convertibles against. They're all going to be, the success of them are all going to be predicated on what the underlying does. So he's making a bet essentially that over the course of a long enough period of time that Bitcoin's here to stay. And it's an extremely asymmetric bet, which, if you're a skeptic, does look like an immense bubble, can be an immense bubble.
Yeah, I don't even, I want to be clear. I don't even want to sound like a skeptic, although this is way, way, way too risky for me to do, but hey, more power to him, right? More power to him. All I'm trying to do is, it seems like there's some risks here where a lot of people that I know that are bulls that I've talked to face, well, I don't know that they've thought through, because I think most of the people that I talk to, at least, believe that the underlying business actually makes enough profit to cover the debt service or the dividend.
That Strategy's underlying business does?
Yeah.
No. Well, in this case, it doesn't. So the only thing people have to watch, but it's so immaterial to how big the company is right now. I completely get your point, but it's so immaterial to how large the company is, and I'm guessing that the dividend burden is going to dwarf probably $20 million a quarter or whatever it's going to. I don't know what it is. I'd have to look at the
assuming Bitcoin just stays at this level for the next year. Okay. That what he has to do is, he's got just a couple options. He either has to dilute shareholders, or he has to somehow get more people to lend him money, or he has to submit more or issue more of these preferred shares. That's right. Which I understand doesn't dilute the common stock, but he has to likely do it at a higher and higher interest rate, which makes him more and more dependent on the price of Bitcoin going up.
100%. You're 100% right that I can't find the price to NAV right off the top of my bat.
It's
but
right
you're
around
100%
40
right.
billion, or 40 billion. I'm sorry. You're talking about the Bitcoin that he owns?
So it's trading at like essentially 2.2 times NAV then. And so that, as far as right now, that affords him the ability to, dilute shareholders, as you're saying it, or to go to market and sell equity.
What happens,
But
Chris, in a scenario where there's not a premium to NAV, there's a discount? If that
well,
were
then
to
you
happen.
have a much different situation. Then the opposite happens. And you start talking about the psychological effect of collateral moving lower that we were talking about earlier. So look, there's no doubt that everything is contingent upon Bitcoin not crashing,
or just not even, but it's all contingent on Bitcoin just going up. If it stays the same, I think gradually, it would take time, but gradually you get potentially into a position where you do have problems because you're taking on more and more and more and more debt. And I get
right?
it. Right now, he only has.
It's it's an asymmetric leveraged bet on Bitcoin.
Yeah, but I want to make this point that I understand that right now he only has, let's say, 8 or 9 billion in debt, and he's got $40 billion of the Bitcoin. I totally get that, but that's just a snapshot in time. If the Bitcoin stays at the same price and he continues to, or let's say just slightly goes down, and while it's doing this, he's borrowing more and more and more and more and more. Now you get to a point where he's got 30 billion in debt, and the value of the Bitcoin might be, let's say, 50 billion. And you're closer to that kind of tipping point where he possibly
you have a totally different leverage ratio. Right. Yeah, exactly.
And, most people say that's never going to happen because he's going to be buying the Bitcoin, which is going to be making the price go up. So he controls the price. But I hesitate there because he's been buying hand over fist over the last, call it 6 weeks or so, 2 months. And as far as I can tell, the Bitcoin price has been, very volatile, but it's been going down, not up. So then, what would the Bitcoin price be if he wasn't buying?
Well, I think, that's a very good question. I think he owns something like 2.4% of all Bitcoin.
Yeah.
I think he owns like 510,000 Bitcoin. But yeah, look, you're 100% right. And, but as long as the current political climate is pro crypto as it is now, but long term, I'll say this about strategy, MicroStrategy, whatever the fuck it's called, the same way I say it about Bitcoin in general. Long term, it's a risk, and it's at the top of the risk on spear. And so when people go to delever and they go to sell assets to meet collateral calls or to just buy groceries next week, crypto is the first thing that they're going to sell. They'll sell crypto before they sell their stocks. They'll sell their stocks before they sell their bonds. They'll sell their bonds before they sell their cars, and they'll sell their cars before they sell their homes. And so, yes, it is a leveraged, asymmetric, extremely risky bet on Bitcoin. However, it's one that up until right now has worked. So
yeah, and I want to be clear here. I'm not saying people don't buy it or any of these things. I'm just saying if you do buy it, just understand the risks. And again, this is just anecdotal evidence, but I would say 80-90% of the people that I've actually talked to in real life that are very bullish on strategy, they don't understand the risks. like they again, most of them that I have spoken with think that the underlying business actually throws off like, $100 million a year or $200 million a year, that this is just chump change for.
I've never met anybody that gives a shit about the underlying business, but that's just me. I've never talked to anybody about MicroStrategy who's buying it for like the business intelligence.
No, I'm not saying that these people are. I'm saying that they don't understand that component of it,
that it's not making money.
Which they think that it is. So there's a lot about what we're talking about here that they really don't understand. And I'm not saying that they shouldn't buy it. I'm saying if you do buy it, just know all the risks that
100%.
are involved and understand the financial statements that we're actually talking about here.
100%. And when you're losing capital, whether it's 20 million a quarter or 200 million a quarter, that's a slow bleed on any company, and that has to come from somewhere. It's going to come from selling equity, or it has, that the shareholder will pay for that at some point. The way that the company's leverage ratios are now, my point before isn't that it's not risky or to buy it, because I do think it's risky, but because it's again, levered asymmetric bet on Bitcoin. But my point before is the $20 million underlying, loss x the crypto loss is relatively immaterial,
right?
Borderline extremely immaterial to the company's current market cap.
Yep.
It would be the equivalent of having $89 and somebody asking you for 2 cents or whatever what I mean. And so it's so you can kind of make that payment in perpetuity. The risk comes in if something happens to crypto. The risk comes in if the premium comes off the stock. The risk comes in if there's a psychological shift about Bitcoin. The risk comes in if quantum computing makes some type of negative impact on Bitcoin, or Satoshi's coins move, or the Democrats win midterms and the landscape for crypto changes. So there's an extraordinary amount of risk. If you want to own Bitcoin, I think the best thing to do is just own Bitcoin. Don't be seduced by the idea of a dividend, when.
Yeah. And for me, I can't tell you guys what to do, but for me, that's what makes sense. I don't need a leverage play on Bitcoin. I don't buy Bitcoin because the price is going to $1 trillion or whatever. I buy it because the utility and having that purchasing power outside of the system. And for me, that has nothing, zero, to do with Saylor or MicroStrategy. I'm just going to buy the Bitcoin. I mean, at the end of the day,
he's doing what a fiduciary at the helm of that business, what I would hope a fiduciary would do. Look, if you're a shareholder from 10 years ago to now, it's going to be very difficult to make a case against Michael Saylor, regardless of how full of shit you think he is. And even if you think Bitcoin's worth zero, it's one of those stupid, scoreboard plays, because how are you going to argue? It's like Tesla. Never made sense to me, the move that company stock made, but doesn't have to, because it did what it did, and that's that, And so, and this is the same exact thing. So if he was my fiduciary and I invested in his company before he considered his Bitcoin strategy in 2022, and I got put in a cryo chamber for 5 years, and I came out of that cryo chamber and the company was worth $90 billion instead of $90 million, I'd be very happy. And I'd be like, well, but yes, they're not so levered that I think they're going to get wiped if Bitcoin comes off a little bit further, but the lower it goes,
because
the lower it goes.
To your point, that debt ratio is very, very manageable relative.
100, yes, unless there's a catastrophic event in Bitcoin, or there's some other type of risk that people didn't know, whether it's whether there's some kind of accounting fraud or whatever, which I think is rare. But those types of things pop up, or I'm guessing maybe there's some key man risk with Michael Saylor, things like that. But yes, it's risky for sure. And everybody should always read my disclaimer. It's on my Substack. Basically says I'm not a financial professional and I don't give advice. I'm just here shooting the shit with my friend George.
What we need to do is figure out a way that we can take people's money and
this already sounds like a bad idea.
Take $100, spend 20 of it, and then just buy $80 worth of gold, and then just become a billionaire.
Right.
Help me understand how we can do that.
Well,
our business model.
Look, in Saylor's case, like what he did was he got, you have to remember, like when he poured his whole company's balance sheet into Bitcoin, 4 years ago, the risks were disproportionately larger than I think they are today. I still think it's an extraordinary risk, but in terms of adoption, crypto is widely more adopted today. I mean, they got the Bitcoin white paper hanging up in the fucking White House. Now, I don't care if you have a problem with it or not, you like Bitcoin or you don't like it. That objectively is a very telling, it's a very telling thing, the fact that the white paper is hanging up in the White House. And so,
it is, but what's also telling is that the white paper is in the White House and the prices have come down since that. I mean,
it hasn't come down yet, but look, you're talking about an asset with a lot of volatility, right? And I'm talking about from 2022 when he implemented the Bitcoin strategy until now. The price is up like 4x since then. Okay, so if you zoom out, the point I'm trying to make is that he's getting paid for taking on the larger risk from 4 years ago than he would be taking on today in implementing a Bitcoin strategy. And today, look, you just saw GameStop. Okay, another company, legacy business is dying, probably out of ideas as a company. So they're okay, well, we're going into Bitcoin now too. Maybe it's bullshit, maybe they believe in it. It's not my job to figure that out. But the point is, the adoption curve is still on somewhat of an upswing. And, again, 4 years ago, if you're complaining that it fell to 80,000, and so he's getting paid for taking that risk. And at some point, that risk may be too great. The right move may be to liquidate all of his Bitcoin and then just sit on a pile of $90 billion in permanent capital at some point and then go into the fucking banana industry or something, like that may be the play.
Stablecoin.
Well,
make a stable coin. All right.
The point is, though, that the case, as somebody that I've been watching this Bitcoin thing for a long time, and at first I said, all right, this is absolute bullshit. You're trading air. There's nothing worth. But once you start to learn about it a little bit, you learn, okay, maybe there is a protocol here that is going to in some ways usurp the global monetary system as it exists today. There's nothing like it. There's never been anything like it. And it's structured in an elegant way where if more people want to adopt it, the stronger it gets. And so there's no real way to tell whether or not it's going to be, 20 years from now, whether or not it's going to be underpinning all of the electronic financial transactions that take place globally, or if it's not going to exist at all and be worth zero, and Michael Saylor will go down in terms of bankruptcy. It's technological adoption, tethered to Austrian economics. And
let's be clear here. The adoption, as far as I can tell, is in speculation. The adoption isn't so much in utility, because I have gone to countries where they have hyperinflation. So they should be highly incentivized to trade their hyperinflating currency for Bitcoin. And right. I couldn't get them to do it. So if it's not being utilized as a medium of exchange, which is what you're talking about.
Yeah, but that doesn't necessarily make that the right decision that they wouldn't do it. I mean, if it goes back to
it's not
what hyperinflating currency.
Right, it's just like buying strategy or buying Bitcoin or whatever. It's not that it's the right decision or the wrong decision. What it is it's the marketplace saying that they're not adopting it as a medium of exchange.
But that's not what's happening. That's not what's happening, though. Adoption is
used as a medium of exchange.
Not as a medium of exchange. I'm not talking about as a medium of exchange.
I'm talking about
You're talking about somebody using it to get out of a currency, which is more like a store of value.
Okay, but I think that it is true. There are people like me that are using it for that utility to have purchasing power outside of the system. I think that's fantastic. And there are some people, maybe in El Salvador or something like that, or Costa Rica, that are using it as a medium of exchange. But I would argue the vast majority of quote unquote adoption has come just through speculation.
Oh, there's no doubt that a good majority of the adoption has come from speculation, for sure.
So that's just what I wanted to clarify.
The asset class in itself is speculation, right? It has no track record outside of 13 years, and so it's either going to be a quick flame out over the course of human history, or it's something that's just getting its feet settled to last for however long, 50 years, 100 years, who the hell knows? But the entire asset class is speculation. But just because somebody doesn't want to get out of a hyperinflating currency and they don't prefer Bitcoin to whatever and by the way, I mean, you're going to be hard pressed to find any hyperinflating currency over the last 5 years where buying Bitcoin would not have helped you retain some of your purchasing power. And this is putting aside whether or not you think it's a Ponzi scheme or not, because it is, in essence, it's a giant technological chain letter, but it's backed by hardware. And so I get that concept, but my point is like the fact that somebody didn't adopt it to get out of a hyperinflating currency, like that's not a negative. That's just a poor financial decision by them, at least now at the margin as it stands today.
But my point is the marketplace is not adopting it as a medium of exchange. So when you talk about adoption, usually people are, well, I'm adopting Bitcoin as money. I'm adopting Bitcoin as money, and this is how it's going to take over from the dollar. In order for Bitcoin to replace the dollar, people have to start using it as a medium of exchange. And
well,
not
you have
just
to
Chris thinking it's a good idea. The marketplace actually has to make that decision, whether you think it's a good decision or a bad decision. And what we do know definitively right now is that the marketplace in places that have hyperinflation that should be incentivized are not choosing. What's a dumb decision?
Yeah, but they're not looking for. They're not looking. But people that are experiencing hyperinflation aren't looking for a medium of exchange. They're looking for a store of value, number one. Number two,
help me understand how Bitcoin replaces the dollar if it's not being used as a medium of exchange.
I'm not arguing for replacing the dollar, even though I do think as all of the layer 2 stuff starts to get settled and the Lightning Network starts to become more prominent, it can and will be used more as a medium of exchange. But right now I'm making the argument for a store of value. I'm making the argument like the digital property argument, the commodity argument. I'm not talking about, you know, what, like, why would somebody in a country that's experiencing hyperinflation be looking for something to, you know, transact for their coffee? And they're not looking for that. They're looking to get out of bolivars, and they're looking to retain their stack of purchasing power.
Well, but in this case, they didn't even want that. So their stack of purchasing power was
just because they failed to make the correct decision, at least now today as it stands at the margin, doesn't mean that they're right.
But what we have to acknowledge is that's the decision the marketplace has made so far.
And if 9 out of 10 people, right, and if 9 out of 10, right, and if 9 out of 10 people agree with that person, right, let's say 90% of people are on your side, right? That's the whole point of adoption, right? That's the adoption curve in process, because 10 years ago, that number was at 0 out of 10 people, right? And so, you know, now 1 out of 10 people would say, okay, well, maybe I'll throw in with Bitcoin. And then as it continues to be adopted, then that starts to move to 2 and 3 and 4. Yeah, it's like corporate balance sheets. It was on 1 corporate balance sheet, you know, 4 years ago. Today, it's on 100 corporate balance sheets. You know, it's on 0, sovereign wealth funds radar today, other than El Salvador. And maybe in 5 years, that number will be 2. And so, you know, the process of adoption takes a period of time. Like you don't expect everybody to.
How long did it take to adopt the internet?
Well, think about, okay, the internet started with like, and this is a good analog because I was going to bring it up before. The internet started back in the late 60s, early 70s. You had the ARPANET.
Everyone had access to it in the 90s.
I'm talking about the difference between what you're asking about adoption, and you want to start in the 90s. The internet started in the 90s. The internet started in.
The reason I want to start in the 90s is because that's when everyone had access to it, just like everyone has access to Bitcoin right now.
First off, not everybody has access to Bitcoin. You think that the goat herders in the plains of Afghanistan right now have access to Bitcoin?
Yes.
No, they don't.
Chris, I've been all
not
over
everybody.
The world.
Georgia, everybody doesn't even have internet access right now.
Chris,
right?
Got this.
You can say that. Not everybody.
Chris,
you can say that.
I have yet to go to a third world country.
You cannot make the case.
Person isn't running around with a
You can't make the case. No, you got to look at Africa. You got to look at companies like Opera that are in Africa, still trying to get cell phones to people, still trying to get the Android operating system to people. Those companies would not still be moving material if everybody had what they needed. So look. The point is, you asked about the internet and adoption, okay? And you're asking about Bitcoin in a medium of exchange. And what I'm saying is the analog is in the late 60s and early 70s, you had text-based, you had, barely had like some news groups, shit like that, but everything was essentially text-based. You had these old Unix terminals in the late 70s, early 80s that, had barely the advent of email in the late 70s, okay? And then you have a whole different layer. Then you have, web browsers, and America Online basically was like the first, maybe like next layer to things. And then you have all the way up to I can control my toaster now with the internet. And so the adoption of the internet just being a couple of computers on the ARPANET talking to one another to a broad worldwide global network, it's a very, very similar analog, with Bitcoin. If you can wrap your head around it, right? I mean, look, I know it's easy to be I know it's easy to be skeptical, but we're talking about 13 years, right?
Yeah, but let's
let's talk about 1970 when the ARPANET started to 1985. How much traction did the internet have versus the next 15 years from 85 to 2000?
Chris, what, as far as the normal average Joe and Jane out there, what can they do with the dollar that they can't do with Bitcoin?
The dollar?
Yeah.
Well, first off, not everybody has access to dollars, but like if you're talking about like somebody outside the country.
No, just well, in the United States, let's say in the United States, what can, as far as just transacting, anyone that is willing to take Bitcoin for goods and services, I'm not making an argument about transacting. I'm making an argument right now. I'm coming from the point of like digital property / store of value, right? But my point,
the idea is that, go ahead.
But my point there is I totally get your analogy with the internet. I'm just saying that you can't just go based on the years. You have to look at the time frame where it's the equivalent technology. And I would argue that right now,
you want to make hedonic adjustments.
We're at like 1998. We're not.
You have no idea. But you have no clue. There's no real frame of reference for you to be able to make that assumption.
No, absolutely. There absolutely is.
How do you argue that when like from the the conception of the internet, right? The very beginning of computer networking, right? Which is, if you're trying to draw the analog between the two, which happened like in the 60s.
Let me frame it to you this way. In 1978, what percentage of the world's population do you think had realistic access to the internet?
I have no idea.
Okay, what about 1998? What about 1998?
I don't know, significantly more.
Okay, so that's my point. If you look at let's just say 80% of the total world's population in 1998 had realistic access to the internet, I would argue that the same percentage has realistic access to Bitcoin right now. Therefore, it's much more appropriate to look at 1998 as opposed to, as far as adoption, as opposed to 1978.
But it's not just about having access. It's also about the development of the network itself and developing software for the network and developing, the network,
Yeah, and that's where I go, and that was my point. But that was my point as far as the network being developed enough to the point where people could easily use it today as a medium of exchange if they wanted to.
Right, but like in your case, it doesn't make sense to, because it doesn't make sense to use it for small transactions. It doesn't make sense like always to use it if you want something that's going to clear instantly. And so like the coding equivalent of a layer 2, which is like in the works, that's the next kind of evolution of things. But it doesn't mean that that it's kind of missed its opportunity. It just means that it isn't there yet. But yes, you're making a great point, which is like people aren't walking around paying for their coffee in Bitcoin.
Correct. And
yet.
Yeah. And look, I hope that we would live in a world where one day they would. But I guess the point I'm trying to make is that if we continue doing what we're doing, we're not going to get different results as far as the Bitcoin community and everything that they are trying to achieve from a standpoint of Austrian economics and a libertarian, let's say, view on the world. What we have to do is we have to remember that the way we turn Bitcoin into a global currency is we have to start with a closed economy that transacts exclusively in Bitcoin, where things are priced in Bitcoin, where they're actually using it as a medium of exchange to produce goods and services. They have to produce an excess amount of goods and services, therefore start exporting those to trading partners that will want to hold that Bitcoin on their balance sheet because they can trade and interact with that closed economy that's opening up. Any other way to angle it, other way to do it, you're not going to get that mass adoption that you need just by people using it as a store of value or speculating on it. You have to start using it to create those goods and services, and that's exactly the way the dollar became the world reserve currency. It wasn't because of Bretton Woods or any of these things or a top-down approach. It was because the United States was producing so many goods and services where the inputs, let's say, were denominated in dollars, that all of our trading partners wanted to hold more and more and more dollars. They didn't need a gun to their head by some king or a president. It's what they chose to do. And that's what you would need to happen with Bitcoin in order for it to succeed. Well, let me be clear.
George,
I think
Bitcoin is in essence the argument and again, I'm just playing devil's advocate here. The long-term argument for Bitcoin is essentially that it's going to in some way exist with, but most people believe in some ways usurp the financial system as it exists today, the global financial system as it exists today. So you have this network that's already in place, that it's kind of growing on as a fungus, right? And just going back to your internet analogy, like there was no such system in place prior to the internet. The internet was completely brand new, and so it didn't really have any competition. It wasn't trying to dethrone any computer networking competition. It was just the first of its kind, and so people make that same argument about Bitcoin, except there's this established king of the ring that's been in place for 50 years or 60 years that it's going up against. So
I think a better analogy for that would be Yahoo and Google. Like Yahoo is there and Google just took them out. Like what, in 2 years, 3 years?
Yeah, but I mean,
but the reason was
two completely different product. I know, but it's such, and I love you, and I get your point, but it's so difficult to find some type of neutral calibration to make an apples to apples comparison in the way that we're trying to do, that it's almost fruitless, no pun intended.
Yeah,
you can't compare Google dethroning Yahoo.
Yeah, but at the end of the day, what is anything? What is any form of money? It's just something that we use as a utility. It's a product. It's a service. So I think the Yahoo and Google is a very good comparison. Because that's all money actually is.
So your argument is that because Google dethroned Yahoo over 10 years, and Bitcoin isn't upending
remember that well. No,
George, what's your basis for how long an unprecedented new technological innovation is going to upend whatever, a couple hundred years of the global economic system as it exists today? How, like, in your mind, how long should that take? 13 years, 50 years, 6 years?
I mean, the dollar started in, let's just say, the 1920s.
Right.
And by 44, it was official. I mean, they made it official to the government, but it was already.
That's 24 years.
Yeah, but in my point there, let's just say it's 20. Let's say it's 30 years. In order for that to come to fruition, we would need to see not just with speculation, store value, in my view, and maybe I'm wrong, but we would need to see much more adoption. And we would be in adoption because it's a superior service or it's a superior product, right? That at the end of the day, that's what's going to get people to use it, that it's so far superior to their, Argentinian pesos or their dollars, that they don't need anyone to convince them. They don't need the cyber hornets on Twitter. They don't need strategy. They don't need Sailor. They don't need Max Kaiser to sit there and scream at them to not use those dollars. They would be doing it on their own. So again, I am very pro Bitcoin. I think everyone should own it. And I absolutely hope that it does dethrone the dollar because it is decentralized, excuse me, and it is outside of the system. And because it is decentralized, and if we were able to create that economy that I was talking about, in my view, that would create more goods and services, which at the end of the day is real wealth. Let's be clear.
Right.
Wealth is not money. It's not Bitcoin.
So what
it's not
about,
silver.
right now, as the White House adopts, a crypto policy for better or for worse, as we were talking about earlier, it is in essence endorsing an industry where there is going to be new products and new services as a result of that. You have companies that are just dedicated Bitcoin development companies that are developing layer 2 software for it, that are, working in it as it. I totally get your point though, about, because Peter Schiff says the same thing. Peter Schiff says, look, when things are priced in Bitcoin, then I'll admit that it has won. And I get that point. My only question to you is, your argument seems to be, because it hasn't happened in 13 years, it's not going to happen.
No, I'm not saying it should be the world reserve currency in 13 years. I'm saying it should have.
I'm not saying global reserve currency. I'm saying price. Things aren't priced in Bitcoin. And you're saying because we're not using it, we're not pricing things by it, and it doesn't have its own economy over the course of 13 years, that's it has run its course.
That is definitely a concern. That is definitely a concern. In addition to that,
my question is, how long should that take?
I don't. I mean, people have the ability to do that right now. It's not like with the technology that's out there, they have the ability to do that. Why they haven't is because that means living in an Amish community, and they don't want to do that. And I get it. I wouldn't want to live in an Amish community either. But that's what you would need to see. And are we going to see that happen? Maybe. I hope so. And I hope that Amish community flourishes to the point where it would need to, where others would start adopting that and pricing their inputs and goods and services in Bitcoin.
I'm sure there are very, 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 very small micro Bitcoin economies on the web where people are trying to advocate for it and do all the things that you're talking about. Maybe it's a dozen people, maybe it's 6 people, who knows? But I'm sure that they're already out there. And the question is whether or not those groups will get bigger or whether they'll just go away.
Yeah, and I guess the last point I'll make there is there are groups like that in Costa Rica, as far as I know, in El Salvador. That's the next place I'm going on a challenge. I would, if it was that superior, and I know we've got technological advances to make, but if it was so far superior, you would see mass adoption in those areas, and you would see just exponential growth, which unfortunately right now we're not seeing.
Correct. And well, at least as a medium of exchange, right? And so, if the people developing software for the Lightning Network wind up coming, like for me, I can see I don't know how the coding is going to happen. I'm not a computer science major, but for me, it's relatively easy to believe that within 5 years, we could have a layer 2 that has become standardized.
I totally agree, because two of my best friends in the space, Lynn Alden and Jeff Booth, are angel investors, and they're actively out there with boots on the ground. They're putting their money where their mouth is, and they're behind this and making it happen. And I have absolute confidence that they will.
So the argument for me that it's not a medium of exchange right now, it's not like, I don't know.
Look, there's going to be more. I guess my point there is there's going to be more bells and whistles. Absolutely. And ironically enough, what they're doing is making it more and more and more like the current dollar network without the centralization. And that is crucial. But my point here is that it's at a phase right now with level 2 and, with the apps going back and forth, that you could very easily use it for a medium of exchange. It's in fact easier than just using a debit card. And I know because I've been down, in El Salvador, and I've actually, not El Salvador, but Argentina. And one of the guys I was with, Shane, he's very technically savvy with this, and he'll sit there and show you how all you have to do. And I've got this thing on my phone right now, Chris. It's called Blue Wallet. And with Blue Wallet, those of you guys who have used this, all you have to do is, it's the easiest thing in the world. You just basically scan a QR code and you're done. And if I'm not mistaken, that's layer 2 right there. And it's very easy to do. It's just as easy as using a debit card, but nobody's doing it. Nobody's doing
Well,
it. And I
I
don't
know,
like
but
that. It's just a fact of the matter.
right. And so just as I was saying, Saylor got paid for being early, as far as taking on more risk, and then everything kind of bent according to his predictions over the last 4 years, and he's reaping the reward of it. It's the same thing. The question is, are we very early on in the layer 2 adoption cycle and what you're talking about? Because look, I go buy a coffee, it's 2 clicks on my phone, I tap and I'm done, right? And so the question is, what is the market to improve that, right? Like in terms of using it as a medium of exchange. And the question for you is, are we early, or has it failed? And you're arguing that it has failed.
No. See, this is where I'm more of a Bitcoin fan than probably the maxis, is because in my view, it's already succeeded. It's done. It's already succeeded.
It's not done though.
Well, it's not, but what I'm saying, as far as this, the success component of it, I would grant that it's already achieved that level. Why? Because it gives us, the average Joe and Jane, the ability right now to transact outside of the system. It gives us the ability to hold purchasing power outside of the system. It gives us the ability to transport purchasing power outside of the system in a way that gold and silver doesn't. It's already done that. And for me, that is a huge W. If it doesn't do anything else, that's a massive, massive W. Now, does it take over the dollar? I don't know. I think the probability in my mind would be much higher if we would have seen more adoption in places like South America or Turkey or whatever it is, right?
Yeah,
but to your point, once we get more bells and whistles, maybe, just maybe, that adoption curve will start becoming more steep. But as far as I can tell, you can still transact very easily using the technology that we currently have. And so I'm less optimistic. But to be clear, the real game changer for Bitcoin, if you're looking at it to take over the dollar or become an actual global currency, is goods and services denominated in Bitcoin. That's the real game changer. And that's what Lynn and Jeff Booth are actively working on. They're creating the infrastructure so people have the ability to do that. And they're creating an infrastructure that hopefully will be so superior to the dollar, not just from a store of value standpoint, but it will be so superior to the dollar that people will just gladly start using it. We'll have these pockets of closed economies that will continue to grow and grow and grow and grow, and then connect and then create that network effect that is required to actually be a competitor for XYZ fiat currency.
Right. So just back to our original disagreement, which is like, are we just early, or is it not going to get there?
I don't know. I don't care, because it's already won.
Because I think what we started arguing about was whether or not 13 years was a long enough time for it to. You're arguing upend the dollar. I wasn't really even arguing that. I'm just saying, is it something that has a foothold in place that's going to stay? And is adoption increasing or decreasing?
Oh, it's definitely here to stay. Yeah. It's definitely here to stay. I think the bottom line here, Chris, is I'm right. You're wrong.
You've been watching too much of my shit. That sounds like something I would say.
All right, but that was a lot of fun. Hopefully the audience enjoyed that back and forth.
This guy, 90 IQ pumper. I got your fucking 90 IQ right here, buddy. Look, I'm not pumping. I'm not pumping anything. Okay. Look, I may have a 90 IQ, but like I'm not pumping anything. As a matter of fact, you can go and watch my podcast on what Bitcoin did with Peter McCormick. I lay out, what I think all the risks are. I'm a gold guy, first and foremost. I have a tiny bit of exposure to Bitcoin, but relative to what I have exposed to gold is, very, very small, because I think gold probably usurps everything, to be honest with you, at least for the foreseeable future. And I will concede that Bitcoin and crypto in general is the riskiest thing that you can go near right now, especially if you believe that from a macroeconomic standpoint, the market is going to turn like I do. So I think that's the tip of the deleveraging spear that people are going to sell off first. So I'm not pumping. I'm just trying to have some Socratic dialogue here.
We've already discussed this. Don't read the comments. Don't read the comments. Josh, you got to somehow hide them, or you know what we should do is at the end of one of these
shows. Like, it's so difficult for people to understand that you may think one thing and say something else for the purposes. There's like no way to get
class that everyone picks on just because they know they're going to get a reaction out of them.
No, that's not true. That
is totally true. Josh, write this down, right? This is what we need to do.
Nerds on the internet.
What we need to do the next show is you need to monitor the chat and get like the meanest comments toward Chris. And then at the end of the show, we'll have him read reading the mean tweets.
I thought you were going to say cut him off. I was like, don't do that. You sound like Vijaya from Twitter.
Josh, you got to select like the 5 meanest Chris.
90 IQ is misinformation. Okay, we need to get NewsGuard and Klaus Schwab in here to monitor the chat. All right, take the vaccine. It's totally safe.
Hopefully, Chris's vagina heals.
That's that same guy. Yep. That's the same guy.
Oh, jeez. That's awesome, man. All right. So lastly here, just quick, we went off on that.
And let me tell you guys too, this will bother me for the rest of the night. I'm not going to be able to enjoy myself at all tonight. This will be on my mind till, about 12 seconds. Don't worry about it.
Okay. So check this out. Here's the housing market data that I think will really kind of shock people. It shocked me.
We have more shit to do.
But look, I'll quickly here. Look at this. Regulation imposed by all levels of government account for approximately 23.8% of the final price of a new single-family home. So here,
we can do better than that. We can get that to 50, George.
And that was in 2021. I'll bet it's worse now. So a study by the National Association of Home Builders found that regulation contributed around $93,000 to the average sales price of a new single-family home, which is 23.8% of the average sales price of $397,000. This is a staggering.
This is like what happened in Canada. Like this is like one. I mean, obviously, you had a lot of outside capital come into Canada and buying real estate as well too. But regulations was a huge part of that as well. I remember Pierre Poilievre and Justin Trudeau, kind of arguing. It wasn't really an argument. Pierre Poilievre was making a lot of sense, and Justin Trudeau was kind of stammering and repeating himself like Marco Rubio in that one debate. But that's insane. Like, you'll elect Democrats, and they'll look at that number, 23.8%, and they'll say, that's fine. They'll say that's fine. And look, I'm not saying wipe out all regulation, but it's like taxes. How much is too much? 50%? 60%? 90%?
Yeah, but if we're trying to make housing, quote unquote, more affordable, there we go. And to give Trump some credit, he's actually been talking about this. I was reading this summary on my whiteboard today, and I won't go over the whole thing here, but this is taken from the executive orders that he's put in place. And I believe kind of what the administration's view is on their plan on how to make housing affordable. We got reduced regulation. Bingo. Expand housing supply. Perfect. Promote efficient land use. Yes. Encourage private sector participation. Absolutely. At the end of the day, the only way that's going to happen. And Chris, check this out. So that was single family or residential, right? Look at this. Multifamily, it's 40.6%. 40%.
Yeah, it's crazy. We have these big, huge buildings that require all this different, bullshit with the staircases and the smoke alarms and the permits and this and that. I mean, multifamily housing is a lot bigger, right?
Right. But now let's think about it through this lens. Let's assume for a moment, and this doesn't even include all the propping up of the juicing of the housing market by Fannie and Freddie and all these government basically subsidies. But let's just assume that Trump is able to achieve this objective, which I think would be fantastic. But let's think about it. That brings down home prices by 25%. Okay, well, the price of the housing market is set at the margin. So if that new home that's right across the street sells for 25% lower than your house, guess what your comp is going to be? And so we could see, a lot of the air potentially come out of the bubble which is a substantial amount of purchasing power. And that whiteboard video I did today, I looked at the total housing market right now as like a market cap. We're about 50 trillion. So if you take, let's just say 25% out of that, we're down to, let's call it 37.5. That's a $12.5 trillion haircut to the net worth of Americans in total. And I'm not saying we shouldn't do it, but unfortunately, we're at that stage where in order to create an economy that's fundamentally sound long-term, we've got to take some short-term pain.
Right. Agree. And, you know, just to, again, play devil's advocate, I mean, there's building regulations that make a lot of sense, and I'm sure there's ones that don't. Without having, you know, without having any expertise on it, I'm sure there's shit out there like you can't use fucking red carpet on the 11th floor of a building for this, that, or the other reason, stuff like that. But yes, I mean, just in general, you know, regulations become burdensome at a point. I'm sure that they, you know, building codes exist for a reason, as somebody wrote here on the side.
I think the key there is not to get rid of all regulations, but let's just say we reduce those regulations by 50%. And when you include that by getting Fannie and Freddie out of the mortgage business,
right,
and by getting the government out of subsidizing the housing market through FHA or however else they're doing it, that's how you're going to get those prices down. And let's be clear, I want to give Trump huge props here in the sense that he's trying to make housing affordable, doing it the right way. And that's by bringing prices down, by increasing supply, where for the past 20 years, we've been trying to make housing prices affordable by allowing the prices to go higher and higher and higher and just creating this financial engineering and all these subsidies just in order
printing money.
To get the average Joe and Jane to be able to manage that monthly payment or to manage the down payment. And that's the government approach, where Trump is taking the free market approach. And obviously I favor the latter, and that's what's going to be most beneficial to the economy long term. But unfortunately, that's what creates the most short-term pain.
Just as an aside here too, you know, even with regulations where they are, I just watched them put up a multifamily building on the corner of, well, I don't know if I want to say it, but in Philadelphia on 2nd Street. And, you know, again, I'm not a contractor and I'm not an architect and I'm not an engineer, but the shit I was seeing on the job site happened to be near a bar stool that I used to like to sit on a lot. And so, regardless of whether or not I intended it, I was inadvertently overseeing a construction project for the better part of 18 months or however long it was. And the shit that was going on this job site, never mind the fact that like now you can't even get buildings like made out of brick. It's all made out of paper mache and particle board, and they layer, you know, brick. Right, exactly. And they layer like, you know, brick look over it. But the shit that was going on this construction site, it was just crazy. And it's interesting too, because they're having trouble filling the building, I noticed. And they were actually thinking about, they filled half the building. There was scuttlebutt in the neighborhood that they weren't doing a great job. There was questionable shit going on at the construction site. And so they had trouble filling the whole building. This is going back now, I think the building opened probably more than a year ago now. And to this day, I just read 3 or 4 months ago that they're taking half the units in the building and earmarking them as Airbnbs. And which is, you know, imagine being somebody that bought in that building. Like now you're completely fucked. And so, and that's with the regulations. So that's the point.
Yeah. All right, buddy.
The other point there, I'm sorry, is just that, like, you know, people say, oh, okay, like, well, you remove the regulations, they're just going to build houses out of paper mache and particle board. And it's like, all right, well, they're kind of already doing that. Like, they're kind of already going bare bones on costs, it appears. But again, the private sector has a way of kind of figuring that out. If you're a home developer and you develop an entire, you know, community full of shit homes.
Yeah, look, I was in the real estate business, and I have built homes from the ground up, and I've subdivided lots, and I've done all. I can assure you, Chris, 90% of the regulation that I had to deal with had nothing to do with the quality of the house.
Right. Well, there you have it.
All right, guys. Follow Chris. It's Substack Fringe Financial.
You know, George, why even try? Why even bother? You know, first off, we've known each other fucking like 8 years. Okay, number one.
I know.
You asked me to come on your show.
I know.
You have no idea what my blog is called. We've been doing this for like 8 weeks.
I've said it a million
You've
times.
gotten it wrong every week.
Josh, it's because Josh put up the wrong damn URL.
Don't blame Josh. He put up the right thing.
No,
just do me a favor.
Don't the Raven.
Do me a favor. Don't try to promote anything that I do anyways. All right? Just say it's nice to have you, and I look forward to seeing you on Thursday or whenever we're going to do next, because you can't handle it. I love you, but you can't handle it.
As always. And I cannot wait for Thursday, because I'm going to have Josh do the mean comments, and we're going to read them at the end of the show.
That's all right. I tell you what, you're gonna have a bigger bone to pick with Josh about just selling him out right now, about getting the fucking name of the blog wrong. You're gonna have a bone to pick with him. The mean comments will pale in comparison to the fist fight you're about to have with Josh right now.
All right, guys. On that bombshell, enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market capitalism. See you on the next one.
See ya.